This is Israel, a country of just 21,640 square kilometers, about the size of New Jersey, with a population of roughly 9.8 million people. Its GDP per capita stands around $60,000, higher than the United Kingdom, Japan, China, and close to France. But income is not the real story. The real story is innovation. Despite regional conflict, in 2025, high-tech goods and services accounted for more than 50% of Israel's total exports. The technology sector contributes roughly 18 to 20% of GDP and more than 30% of total income tax revenue. On a per capita basis, it consistently ranks among the highest countries in venture capital investment. So how did a small country with no oil wealth like Saudi Arabia and no vast domestic market like the United States, and in several regional conflicts, become one of the most concentrated tech ecosystems on Earth? The answer begins with constraint. Look at the map. To the west is the Mediterranean Sea. To the north, Lebanon. To the northeast, Syria. To the east, Jordan. To the southwest, Egypt. Since its founding in 1948, the modern state of Israel has experienced multiple wars with neighboring states and long-running conflict with the Palestinians. Major regional confrontations include wars involving Egypt and Syria and ongoing tensions with groups in Gaza and southern Lebanon. The escalation following the October 7, 2023 attacks and the subsequent war in Gaza created serious economic uncertainty. Tourism fell sharply, reserve soldiers were mobilized, government spending increased. In late 2023 and early 2024, quarterly GDP contracted. Yet by 2025, Israel's core technology exports remained resilient. International investors did not fully withdraw. Multinational R&D centers continued operating. This resilience is not accidental. For decades, Israel has structured its economy around the assumption of instability. Defense readiness and technological superiority are viewed as strategic necessities, not optional luxuries. Economists would call this a security-driven innovation model. One of its most distinctive features is mandatory military service. Most citizens serve around 2 to 3 years, but the military in Israel does more than traditional defense. Elite intelligence divisions, especially Unit 8200, specialize in cybersecurity, signals intelligence, encryption, and advanced data systems. Young recruits in their early 20s manage real-time cyber threats and complex intelligence operations. These experiences create advanced technical skills under extreme pressure. After service, many move directly into startups. This creates powerful human capital spillovers. Skills developed in national defense flow into civilian markets. It commands a significant share of global cybersecurity venture capital relative to its size. Cybersecurity firms founded by former military personnel often become acquisition targets for global technology giants. Compare this to Germany or Italy. Both are advanced economies, but neither has a comparable defense-linked startup pipeline embedded in national culture. In 2025, Israeli startups raised approximately $15.6 billion in venture funding. For a population under 10 million, that density is extraordinary. Tel Aviv and its surrounding region form one of the world's most concentrated startup clusters. Founders, engineers, venture capital firms, and multinational R&D centers operate within close proximity. Economists describe this as agglomeration effects. When talent and capital cluster geographically, knowledge spreads faster, deals close quicker, informal networks form. Over 300 multinational corporations operate R&D centers in this country, including major American technology firms. They are not there for cheap labor. Israeli tech wages are comparable to Western Europe. They are there for specialized expertise. This country spends around 6% of GDP on research and development, one of the highest ratios globally. The OECD average is roughly half that level. South Korea also spends heavily on R&D, but its model relies more on large conglomerates. Israel's ecosystem is more startup-oriented. Companies scale rapidly and are often acquired, recycling capital back into the system. Former founders become angel investors. Early employees launch new firms. This feedback loop strengthens over time. Immigration has played a critical role. In the 1990s, Israel absorbed a large influx of highly educated immigrants from the former Soviet Union. Many were engineers, mathematicians, and scientists. From a macroeconomic perspective, this was a positive skilled labor supply shock. Combined with institutions like the Technion and the Hebrew University of Jerusalem, the country expanded its innovation capacity quickly. Conflict has been constant in the broader Middle East, including tensions involving Gaza, Hezbollah in Lebanon, and periodic escalations affecting civilian and economic life. Yet Israel's technology sector has demonstrated relative insulation from physical geography. Software exports are digital. Cybersecurity services are borderless. Venture capital is global. During the 2023 to 2025 conflict period, while certain sectors such as tourism and retail weakened, technology exports and foreign acquisitions continued. This does not mean war has no cost. Defense spending rises, investor sentiment fluctuates, risk premiums increase, but the economy is not dependent on a single factory or port. Its core output is intellectual property. That distinction matters. It still faces structural challenges. Regional instability increases uncertainty. Political polarization can affect policy predictability. Workforce participation gaps among certain demographic groups may limit long-term labor supply growth. High reliance on global tech demand exposes Israel to global slowdowns. No growth model is immune to risk. Israel did not become a technology powerhouse because it was large. It did not become one because it was resource-rich. It became one because it invested heavily in human capital, research intensity, and dense innovation networks under conditions of pressure. Constraint forced specialization. Security threats accelerated technological competence. And a culture that tolerates risk allowed experimentation. The wars and regional tensions did not stop innovation. In many ways, they shaped it. The deeper question is this: can stable, resource-rich countries replicate a model built under existential pressure? Or is Israel's ecosystem the product of unique historical and geopolitical conditions? Because in the modern economy, scale alone is not enough. Specialization, talent density, and institutional design determine who leads. And it chose to specialize in intelligence, cybersecurity, and deep technology. For a country that small, that strategic choice reshaped its economic destiny.